Welcome to the Tesla Economist. Please hit the thumbs up and don't forget to subscribe. In the last video, we went through our model for Tesla's bear case of what Tesla's stock price could be in 2025 if things didn't go so well. And I found that I'd made a mistake. In my defense, I've been doing a lot of math lately, and it's been quite hard work, and I've been getting a bit tired doing it all, but I found an error in my math for my worst case scenario model. Unfortunately, this is not a small mistake either, and it has a huge impact on everything. Firstly, I think we might need to also make an adjustment for the 2021 and 2022 deliveries. We currently have the number of Teslas at 1 million for 2021. As likely as I think this is, we could have delays in Berlin, and it looks like the Model X and S might not even be selling in Q2 either. So let's wind this number down to 850,000, and for 2022, we can put in 1.7 million, which does feel low, considering there'll be so many factories online by this stage, and fairly scaled up too. But we're aiming for a worst case scenario. Anyway, that brings us to a total of 5.7 million cars for 2025. So I've also trimmed back all the model sales in our table accordingly, taking our auto gross profit from 78 billion down to 67 billion. And despite a lower battery requirement of 50 gigawatt hours less for fewer cars, I'm going to keep the energy business as it was. So total battery production now is only around 450 gigawatt hours. But that wasn't the mistake I was referring to. Because we speculated that Tesla would be using a tax avoidance system, in the model I didn't assign a fixed corporate tax to their profit. Instead, I used an arbitrary number based on what we have thought they might be at. So the model didn't adjust for tax accordingly. Firstly, thanks all of you who spotted my error. I'm glad to see you are checking my numbers. I am human, despite what many of you think. I'm actually not a robot, or C-3PO for that matter, and all humans make mistakes. Anyway, not meaning to drag on the intensity of the situation any further, but we included a tax of $56 billion when we only had an EBITDA of $84 billion. That was 66% tax rate. Oops. This obviously changes everything. I've reduced the tax rate to around 25%, which is now $18 billion, with our new adjusted auto sales equating to a net profit of $54 billion. And if we stick with our PE ratio of 30, then we have a company valuation of $1.6 trillion and a stock price of $1,689 a share. Wow. Personally, I'm really happy with anything over $1,500 a share. That's a Tesla stock price that I'm very much looking forward to. And even if it takes until 2025 to reach there, without robo-taxis, then I'm still going to be pretty happy. Of course, I am looking at real numbers here, not nominal. We're not factoring in inflation. But if we take $1,689 back from today's stock price, that's still a return of over 25% a year. When you compound such large yields, it certainly starts to add up. It's funny, because on the previous video, I even said that we were a bit disappointed it wasn't around 1,500. I think at that stage, I probably should have gone through all the math again, but like I said, it has been a tiring challenge. And it's very ironic that it was literally the last part of the entire project that I got wrong. Okay, so we've done the numbers now, and this is what's possible from the company, and it's incredibly exciting. However, we've also established what it all comes down to. Two things, batteries and FSD. So I really want to focus on making sure Tesla and their partners are able to seriously produce and supply enough batteries for what is required for this business. And the other element is to make sure that Tesla really are going to reach level 5 autonomy, and within a reasonable period of time. If these two sides of the business are achieved, then we know the kind of numbers we can see. The rest of it has pretty much been taken care of. There doesn't appear to be any competition coming, there doesn't seem to be any demand issues, and their energy business will be about saving customers money, so it simply makes sense for them to purchase. We have huge factories being built as we talk, capable of delivering closer to the sort of supply we need to cater for this demand. We have a Model 2 hopefully being revealed later this year to only further increase demand and lay down further foundations of the robotaxi network. Also, a big thank you to all of you not losing it when I gave you such a low bear price in 2025. It would seem that as long as Tesla can make these vehicles, the stock price will keep going higher. It's because these are such large capital items, and Tesla are managing to make them with such high margins. That's why the profits and stock price are so high. And then to add even higher margins with software upgrades like FSD again. So once again, it's FSD and batteries we need to keep our eyes on. Oh, and one other little lesson. If you're using this model yourself, then don't forget to adjust the tax too. Thanks for listening. Please hit the thumbs up and don't forget to subscribe.